Vanguard has just launched a new global ETF, VALL, that is Victor Alpha Lima Lima. This holds over 7,000 companies for an ongoing cost of 0.07%. Did you hear that? That is half the cost of VWRP. Now, should beginners choose VALL, or if you already invested in or you own VWRP, does that actually change anything? Well, this is your home. Let's dive deeply once again. Welcome on board. Welcome to Yacht Finance. I am Yacht, and over here we talk about investing, we talk about personal finance, we talk about practical strategies in building long-term wealth. I break down finance with real investment strategies, with real numbers to the layman's perspective. And so if this is why you are here, please consider subscribing. I also render one-to-one services, and I help families build wealth. I also help families build their young ones. I mentor them from there to there to there to there. All right. So once again, the link is in my description. Book a session one-on-one with me, and let's move that finance difficulty one from that side to you understand what I'm trying to talk about? Anyway, if this is something that actually inspires you, then consider subscribing to this channel, because over here we should stray. All right, let's dive deeply into why we're here today. The full name is Vanguard FTSE Global All Cap UCITS ETF, and for UK investors, the accumulating GBP trading line on the London Stock Exchange is VALL. So that is Victor Alpha Lima Lima. Now, this was launched on the 18th of August 2026. And it was listed on the 20th of August 2026. And so if I say this fund is actually brand new, now this is hot. This is new, and for investors, I know everyone is watching. And for brand new investors, they are wondering, what is this? What is that? This is why you need to watch this video to the end of it, all right? Now, it is Irish domiciled. It is UCITS compliant. It is passive. It is physically replicating, and it tracks the FTSE Global All Cap Index. That is a beauty. The index is the key because it tells you what you are actually buying. When you close your eyes and pretend, no, I need to move left or move right, you want to be sure what you're actually doing. And so to me, knowing what I'm actually buying means everything. Let's simplify the terminology. So global means companies from around the world, and all cap means large cap, mid cap, and small cap. And so that factors these three within. Now, that is the difference between the VALL and the VWRP, because the VWRP actually constitutes the large cap and the mid cap. But with the current fund introduction, that is a VALL, the Vanguard FTSE Global All Cap UCITS, that include the small cap as well. That is what actually excites me. Vanguard says VALL gives exposure to more than 7,000 companies. The index itself covers around 98% of the global investable market. So by comparison, the FTSE All World covers around 89%. So think of it like this. With a VWRP, you already own a huge slice of the global market. And with a VALL, you actually own an extra layer of the cap. You understand? And so, yes, the VWRP is awesome, but with a VALL, you own other smaller businesses that you were missing on the other side. And to me, that is where the game actually changes. And so now, when Vanguard actually says over 7,000 companies, you can tell the number of companies your little fund will be invested in. And if there is nothing that should excite you about this now, once again, it is no financial advice. I need you to ensure that you've done your due diligence, or probably you are booking an appointment with someone. But if you ask me, this is one to watch out for, especially when it launches like that. Because VALL is actually brand new, Vanguard hasn't published its holdings report. But the good news is we already know the index, and we know that the index actually consists of over 7,500 companies. And so we already have an idea. And to top it up, we have the large cap in it. What am I talking about? The Nvidias are listed. Apple is in, Microsoft, Amazon, Alphabet, TSMC, Broadcom, Meta, JP Morgan Chase. These are all under the largest holdings. So don't just hear small cap and assume the giants actually disappeared. They do not. They are in full dominance. They have dominated. They've taken their places. And on the other hand, America still represent on this. They hold about 62% of the portfolio. Why? America still dominates the global market capitalization, and so you can't blame them dominating this fund as well. It is what it is. But on the other hand, there is still exposure to Japan. There is exposure to the UK, Taiwan, Canada, China, South Korea, France, Switzerland, Germany, India, Australia, and many other countries. So one ETF, thousands of companies, and dozens of markets. What are you talking about? Small companies represent only about 9% of the global market value, but they also represent thousands of smaller businesses. And this actually means VAL will behave similarly like the VWRP most at times, and the large cap still drive the majority of performance. But you gain an extra layer of diversification, which is the smaller cap. Small caps are where the future mid caps and large caps come from. And not every smaller company becomes an Nvidia. Some grow, some actually stagnate, and some But that is why I love the index, because I get that exposure into various companies. And so A may be doing well, B may not be doing well, but you see, A may be covering and shadowing B, and so I don't feel the impact, all right? So I get it. Some people say ETF, no, because when you diversify, it is huge. You can imagine over 7,000 companies in this fund. That means your money is broken into thin layers. But then, if one little company is doing well, that whole money can move into that company. And so some investors say, we love the individual companies, and so they are not excited about this. But there is also nothing wrong owning a smaller company through an index and owning an individual company that you actually understand the current growth measures in the vision. To me, you can own both ETFs and individual companies. Yeah, you can. Okay, so now let's compare VALL and VWRP, because see, I want to know what is actually happening. And I believe you on the other side, you are curious and want to know, so what is the difference? With everything I have said, you're wondering what is the difference. So let's start with the VWRP. That is a FTSE All-World Index. It holds large plus mid caps, like I explained earlier. It's developed plus emerging market. 3,782 stocks and 0.14% ongoing charge. Years of history, of course, because, yeah, you know how long it's been in existence. Deep liquidity, tight spreads, known behavior in different market conditions. When we talk about known behavior in different market conditions, we can actually compare on a full scale of 10 years. And so for the past 10 years, its full annualization gave us 11.6%. But is there any figure when it comes to the VALL? Well, when it comes to that moves into the negative, because we are still monitoring its trend and its behavior. Unlike the VWRP, where it's actually established, but you see, Rome is not built in a day. It started from somewhere, and so did the VWRP started from somewhere. And now we zoom in the VALL. How are you going to be doing, Daddy? Okay, let's see how that also look in comparison. So that is a FTSE Global All Cap Index. That is large plus mid plus small cap. Unlike the VWRP, this one holds all three. Developed plus emerging markets, 7,000 plus stocks. 0.7% ongoing charge, which is awesome, comparable to the other. It's brand new, as we all know, no performance history. Liquidity still developing, assets still building, tracking still improving in real world conditions. On paper, considering we have the large cap, the mid cap, and the smaller cap, VALL looks actually promising, but as an investor, I look forward to the data. Yeah, I may be excited, but hey, we are screwed. And so we look forward to the data, because out of the data, we can actually analyze, especially in the first year of inception. Let's see how it does. As on 25th of August 2026, the VALL was trading at a price of £3.69. And the VWRP was trading around 137.92. Now, do not tell me VAL is cheap and so go and load up. It's got nothing to do whether an ETF is doing well or not. The price has nothing to do with it. There are other fundamentals you need to be checking. It's got nothing to do with the price, because it is trading on a low volume. And so, yeah, no. But then there are some things you should be actually paying attention to. And with this, I am talking about the underlying companies. I'm talking about the index. I'm talking about the charges. I'm talking about the structure. And I'm talking about the expected risk and return. This is the part that most beginners skip, but to me, that is the most important part, all right? Before buying any ETF, there are few things you should know, my darling, especially for a beginner investor. Don't just throw money in it because probably you feel like I'm hyping it up. Well, it is my energy. This is just a yacht for you, but they've not paid me to be doing this. And I know a lot of other finance platforms may be pushing this narrative here and there, but it does not negate a buy signal. Please be careful out there. You need to do your due diligence, and there are few things you need to be doing. Otherwise, you do yourself a disservice. And how can you throw money into something that you actually do not understand? And so please ensure that you understand the assets under management. You understand the trading volume, the bid offer spread, the tracking accuracy, liquidity, small cap behavior. Do you know their behavior? Volatility, all right? At the moment, Vanguard gives VAL a risk indicator of 6. And so during a bad market, this may fall drastically. It doesn't mean it will, but then considering history, there is a high possibility. Now, if anything I've said is nothing to write home about, well, the lister says it gives a risk indicator of 6. That is something worth considering. For someone starting from zero, I believe VALL actually deserves a high level of attention, especially with a 0.07% on a large cap, mid cap, and small cap. This is actually worth considering. Now, I wouldn't say VALL is better than VWRP, because once again, I have the data of one, but I do not have the data of one. And the other, which is the new one, actually consists of the VWRP and the small caps. And we all know that the smaller caps sometimes can have huge losses sometimes. And so I wouldn't say this is better than this. I'm going to wait for some data. Then I can do a proper assessment with these two funds. If I already own VWRP, would I sell? No, I wouldn't sell, because now, is it doing well? In 2025, I believe it gave us around 22.6% return. At the moment, it's not really doing well, because we all understand what is happening globally and geopolitical tension and decisions from leadership here and there. And so we actually, if you are an investor, you understand what is taking place on the stock market. And so I wouldn't sell that, because even on a 10-year stretch, that has given us some good numbers that we can write home about. And so what I'll do is I'll keep that. But I will also ensure that I'm taking advantage of this new cup as well. That is what, personally, if you ask me, I would do. And with time, with proper data, I can analyze properly. Vanguard didn't reinvent investing, but they did launch something significant. And so to me, if I'm using this eyeball to assess, this is a new addition to my portfolio. I've taken a stake in this fund, but it's not huge. I intend to move gradually in it and monitor it, how it goes. I had seen someone actually invest over £44,000 in it, which is awesome because you know when you're a long-term investor, this is something you want to take advantage of. And so yeah, do your due diligence. And once again, VALL, welcome on board. Thank you so much for being with me. Once again, if you haven't subscribed to this channel, this is your home, Yacht Finance. Do me the honor, subscribe, follow this platform. Get ready to move the finance department to the next level. I can't wait to see you at the top. Say, I'll see you in all honesty. God richly bless you, and I'll see you in the next.